Alright, this is a continuation from our previous video. So we are still considering the fake out of trend line. And for us to have a trend line, we said we need to have two levels connected together, either a higher low and another higher low for an uptrend scenario, just as we have in this video. This is a higher low, this is a higher low. So connecting these 2 points together is what gives us an uptrend. So, and it is expected that when price pull back to the trend line, it should be able to give us a reversal signal, either a candlestick pattern formation or a chart pattern, whatever confirmation you might want to use, and then move back to the upside. So in this scenario, we have our higher low and our higher low and a trend line which price bounce on, exactly as we are seeing here. So when this price went and pulled back to our trend line here, we are expecting to see that price give us a formation, either a candlestick or a chart pattern, and then we continue our move to the upside to create a new higher high. But eventually, look at what happened. Price break out of this zone, out of this trend line, and the breaking of price out of this trend line is what gives us a fake out. So this is a fake out. Why do we call it a fake out? Because when price break out of it and comes down, an ideal scenario is for price to return back. If this is a breakout, because in a trend line we say we have three scenarios. We have a breakout, we have a reversal, and we have a fake out. And what we are seeing here, from this level to this point, this is a reversal. Because price came, hit this trend line, and moved back to its original direction. Because we say a reversal is when price keep respecting the trend line, bouncing on it to give us a higher high and a higher low for an uptrend, or giving us a lower low and a lower high for a downtrend. So this scenario that happens here, and also you see how price came back here, bounced on it to give us a new high. So this is a typical scenario of a reversal. Then what we have here is a typical example of a fake out. So this is a fake out. Let's change the color. Change this color to red. So this is a fake out. So fake out is when price break the trend line, inducing trader to go short for an uptrend. For an uptrend is when price break the trend line, inducing traders to go short, which means it deceives them to go for a sell trade, only for price to return back into the trend line and continue to go in its original direction. So fake outs are manipulation, and this is done by smart money traders in order to sweep liquidity. And this is what happens here in this scenario. You can see how price came, break out of it. The inducement here, you can see this is an inverted hammer. This is an inverted hammer. So this rejection gives you hope and belief that, okay, price have retested this trend line and is giving us this type of candlestick pattern, and then you sell only for the price to reverse back. Now, another scenario for you to watch out for is the speed with which price break out of the trend line. Look at here, when this works, price came to it with speed, but look at marketplace around it, then gave us this engulfing candlestick pattern. But look at what happens here. The force of this candle that was coming up, bearish, then bearish, break it up. The force gave us an inverted hammer as if we are going down. And immediately, because at this zone now, people bought here with this engulfing candlestick pattern. People bought. So when you see this candle, you will buy. People buy. And their stop loss is at this low, outside the trend line. That is where their stop loss are. This is their stop loss, and this is their entry. And then look at what happened. This fake out will come, remove them. And when it remove the buyers from this zone, take them out, look at what happened. Induce sellers again, gave a hanging man, inverted hammer, candlestick pattern. Some people will now sell, now put another stop loss above this level, now will now be their new stop loss. And then price returns back with speed. Now can you see the force with which the price break out of the trend line? You can see the force, you can see the move. So the force with which it break and the force with which price leave that zone speaks a lot. So here is a typical fake out. So price break out of the trend line, deceiving traders as if the market is changing direction, only for price to return and continue in the same direction. And now here, look at what happened. It now continue as a reversal. Price come, retest the trend line, gave us a pin bar candlestick pattern. You can see this pin bar, and then look at this follow up candle. So whenever you get a signal, please wait for a follow up. If you are to trade this reversal, you need to wait for another follow up candle. So if you get another bullish follow up candle, you can make your entry to avoid fake out. Now look at this zone. Price break this zone, gave us inverted hammer, but we have no follow up bearish candle for us to go down. So if I'm to trade here based on candlestick, I will still wait. I will need a follow up candle. Okay, and if you are to trade here as a chart pattern, you will see that if this is your first leg of the W is formed here, price will go back. Of your M pattern, price will go back. It did not return back to give you your second M. It continues to the upside. What I'm trying to say in essence is this. If I am to trade this zone, price has come, right? And it went back to somewhere here. If it should go back. Price has come down from here, no doubt. Price has come down, it has it has come down. Then it will go back. Since if I'm to trade chart pattern on a lower time frame, it's supposed to give me an M to the downside. But you see, when it went back, it never returned to give us this M. It rather continued to the upside. And for that reason, I will not be a victim of this move because I was waiting for a confirmation. And if I am to trade this as a candlestick pattern, when I saw this move and this follow-up candle, the way it happens, I know that this is actually a fake out. And you see that price continues. So whenever you get a fake out such as this and price returns back and make a new higher high, you should know that there is still a trade of the smart money hanging in this fake out. So they are going to come back to mitigate this their trade. And on this candle, you will identify that we have imbalance. Look at. All the way from here is an imbalance. So all the way, the space between here and here is an imbalance. And then you put your Fibonacci and mark your fake out to the new high. And having done that, you see how price went. Price pulled back to 61.8 level of the Fibonacci, gave us a pin bar candlestick formation, which is inside there. It's covered now. We showed it earlier. Give us this pin bar candlestick formation around our level of 61.8 and a double confluence. It fill up this imbalance. It is that is one is around the level of 61.8 and also is on our trend line, and then we make our entry to the upside. Alright, so this is how to trade, identify breakout and trade breakout. Then the other reversal, the other pattern we talked about in trading a trend line, which is a bonus because this video centered around trend line fake out. So the other pattern we talked about is breakout. And look at, price came break out of this trend line. So this at this zone, this trend line was broken. Oh God, I'm trying to see how I can move this. Good. So at this zone, this trend line was broken because price, you can see now, price came with force break this trend line. And we say the breakout is when price refuses to respect the trend line as a support or as a resistance. So price break out of this trend line at this zone, break through it to the downside. And then for you to trade this, you need to be patient. Price will always go back to retest. So when price break out of this zone, mark out the candle that break out of it as your zone. Look at it. Mark out that candles as your zone. And with this candle, price came back. Always wait, price will return back. And then look at what happened. Price pulled back into that zone, retest it, gave us a bearish, beautiful engulfing pattern, and we are in for a sell. And from there, we can now connect another trend line. because price just gave us a new lower high, and then you can see now that we have our new level here, our new lower high, and they have this characteristic formation will now move. So this is how to trade a breakout. As a conservative trader, you wait for a retest, mark that candle that break it out, price will always move inside, retest, and move to the downside. And I believe you have gotten value and you are gaining value from this video and from our channel. Please do not forget to like the video, do not forget to share with your friends and with your loved ones. Subscribe to the channel, turn on the notification bell so that you'll be the first to get notified whenever we publish our next video. See you in the subsequent video.